Joining our conversation now is Todd Rosenbluth. He is head of research over at TMX VettaFi. First off, Todd Rosenbluth, it's great to see you.
Great to be back.
Let's talk about this triple crown, as Eric has been calling it. You have record launches, record flows, record trading volume. I want to start where Eric ended, that you think about the launches that we're seeing through, not just coming through in the U.S. at record levels, but also internationally. Do you agree this is as good as it gets?
Well, it's great to be an ETF analyst or an ETF reporter covering this because there's always something to be able to talk about. And the ETF industry couldn't be healthier. So I'm really excited about that. I'm excited that we've got new products that are coming, some that are risk-on related products, so single stock leveraged or income-oriented products. But we've got some new entrants into the marketplace, active firms that are now here for the first time. Pictet, for example, is a firm that's recently entered in the ETF marketplace. I think I was on last. Yes, that's how I believe you say it.
You go back and edit the film then.
We sound like Americans.
You said Pictet like 20 times.
Yeah.
It's too late.
Yeah.
Anyway.
Well, sounds better when you say it.
But lots of firms that are coming in, and even the established firms are continuing to expand some of those successful lineups. So it's a great time.
So what does it say about the fact that active is really booming right now? Whether it's fixed income or whether it's equity, active is having its moment. And for so long, everyone thought passive was going to eat active's lunch.
Well, it did, and it still is. It is still the majority of the overall assets. It is still the majority of the overall flows, but that gap is starting to narrow. Some of that has to do with the firms that have come into the marketplace and are leaning in more heavily. Some of those asset managers are leaning more heavily. We've seen BlackRock add active strategies into their model portfolios throughout the year, and that's helping to boost things. We are also seeing people just believe in active management in terms of volatility. For fixed income, so we've seen that be popular. But I don't want to gloss over, there are some success stories in the index-based ETF world. Victory has an ETF, VFLO, VFLO, that's gathered over $3 billion. It just launched a year ago. Doubled in size. So there are success stories in the index world. It's just easier to focus on the active space.
Speaking of something like that, where the index is smart beta, we would call that passive, but that actually is picking stocks based on active design. Smart beta is counted in passive, and it's this, once a year, all these people worry about ETFs. The latest one is that, oh my God, they're going to ruin capitalism. Now, obviously, I don't agree. Stocks go up and down, even with all these flows. The other thing that the dig is that there's more ETFs than stocks, but there's also way more mutual funds than stocks, too. Personally, this has been coming up my whole career. I don't see any problem at this point. Maybe you do, but as an analyst, I'm sure you have to respond to these some worry articles that come up pretty regularly.
I think ETFs are a way that many more people are getting exposure to the marketplace. I respectfully disagree that smart beta or factor-oriented is active. It is choosing stocks, but it is choosing stocks based on rules, and we understand when that playbook is coming out. And indices rebalance a couple of times a year, sometimes once a year. You just referenced the S&P 500 that went through a rebalance. Companies got added in, 3 of them in, 3 of them out. That's healthy. That's what an index is supposed to do, is supposed to clean things up. I think ETFs are increasingly the go-to vehicle for many more people to get exposure to the equity, the fixed income, and even the crypto marketplace too.
Let's talk about an interesting notice that we saw from the SEC. I believe it was last week. We know that, over the past several months, we've seen U.S. filings for 3 times leveraged products, 5 times leveraged products. The SEC basically posted these letters saying that it wasn't going to continue with its reviews of these applications. So it seems like a line in the sand has been drawn when it comes to how far some of these leveraged ETFs can go in the U.S., Todd. And I wonder, whether you think this is the end of it, or are we going to see some of these issuers come back and try again with regulators?
Well, I would hope they would follow the rules. And if the SEC has come out and said, we're not going to review these, let's not waste the time. There's enough other great products that are coming to marketplace. We've seen a proliferation of leveraged ETFs that have come to market that are taking on additional risk. I caught my eye, and I know you have Direxion CEO on later on in the show, but they launched a suite of products that are the top 5 companies within a respective industry. Semiconductors, for example, I think the ticker is TSXU, is the top 5 there. So this might be an oxymoron, but a little bit more diversification to your leveraged ETFs. So we have the just semiconductor only. We've got the individual stocks this is somewhere in the middle for people who want a little bit less risk on.
I'm looking at Bitcoin, currently unchanged at about 90,000, but a long way off from the record highs that we saw in October. Some people are worried about a crypto winter. What does that mean for ETFs tied to crypto and the various other altcoin tokens?
So I'm the least qualified person to probably offer crypto advice on this table.
But that was a big growth area of ETFs
It
for
is.
all of 2025.
It is. So there was adoption. I think what we've seen is that even though crypto has pulled back and Bitcoin has pulled back, most of the money has stayed in. There have been outflows for some of the products, but what we've seen is also a next evolution of Bitcoin and crypto-related ETFs. I saw Neos launched an Ethereum income ETF last week. We've had Calamos offer downside protection to cryptocurrency. So it isn't just following the price of Bitcoin and Ethereum, but either downside protection or enhanced income.
Eric, what do you think?
Yeah, I mean, only 4% of the people actually left, so it's pretty strong. But still, 40% is definitely a drawdown. But it was up 122% last year. That's 5x anything else. So, I mean, things can't go up that much every year. Like, everybody has to relax a little sometimes. But speaking of relaxing, I'm relaxed because I have a steak dinner coming my way for zero cost. Todd's going to pay for it. Last time he was here, we bet on whether large caps or small caps would outperform through his.
And you were on team large cap?
I'm on team large cap. Though never bet against U.S. large caps. He wanted to. And so S&P's up 6.2%. Your small caps are up 3.4%. I don't know, man. That's a lot of ground to try to gain between now and the end of the year. So when do you want my restaurant choice?
So a few things. One, the last time I was here on air, you sprung this bet on me. It wasn't that I came to you, you came to me. Second thing is, as far as I know, the year hasn't ended. We still have 3 weeks left in the marketplace. 300 basis points of the gap has been narrowed in the last month. And I want to just remind you, there was a football game that the Eagles played against the Rams earlier this year. And I believe the Eagles were down at halftime and they narrowed the gap in the third quarter. And I believe the Eagles won. That's the only victory I think you're going to have tied to this conversation.
Wow, mic dropped. I will say the Fed, coming up in 2 days, could be consequential for the small caps bet. So, you know,
If it isn't already priced in.
that's
The Fed is his Hail Mary. That's all he's got.
Well, it's never too late, and we'll be talking about that, I'm sure, when we're together at the Exchange Conference, the three of us.
Nice plug.
You're welcome to join us. You're welcome to join us
That's
as
a pro
well.
right there, working that in.
That was
Look at
very smooth. Todd Rosenbluth there of TMX of Edify. Great to see
We
you.
want pictures from the steak dinner.
Absolutely, yeah, please. Maybe we can live stream it. That would be fun.